What's going on, everyone? Gilman with Wellthy Stocks, back with our daily Apple update video where we take a look at how Apple stock traded today, key levels of support and resistance that we are looking at moving into the future, and based on that, what we think Apple stock could do. So real quick, if you enjoy videos like this, don't forget to hit that like button down below, subscribe to my channel if you are new, and comment down below what your thoughts on Apple are, and I'd love to chat with you guys down there. So let me go ahead and hit record here. We'll get right into the video. Small green day for Apple. It was a roller coaster ride for most of the day, but the good news is that we ended the day up 50 cents. So not another red day. That is, I think, right now enough for me to really be happy about. Remember yesterday I talked about the upside that Bank of America sees in the Apple stock, with run room into the 150s, 160s. We talked about that. We talked about the bull case by another analyst over the weekend, talking about a push towards 175 or bull case of 225. So we talked about that as well recently. And then last week, we also covered the wearables growth that Apple has been experiencing, right? So, we're talking, AirPods, we're talking Apple Watches, we're talking kind of all these things that have really done super well for Apple in the last year. So if you've seen my previous videos, you're aware of that. If you want to check out yesterday's video on the Bank of America upside, feel free to do that as well. But here, it should be a quick one, just going through price action. And then I also want to talk about some things in the overall market, because I did talk about that yesterday. I want to kind of provide an update on that. The other thing that I wanted to really quickly cover is, Q4 S&P 500 buybacks were increasing by 28%. Tech leads sector pack, and Apple leads those companies. So Apple is buying back a lot of their stock, which is great news, typically, because that means that, we should start to see a little bit of a push up if they're continuing to do that. Remember that it's good for a company to be cash neutral. Apple, with the amount that they're buying, they need to get back to kind of that cash neutral point. So now let's take a look at how the stock traded today. We'll talk about key levels of support, key levels of resistance. So not gonna lie, in the pre-market, I woke up and, everything was looking down. I was getting the 5% down notification, 10% down notification, and I was like, wow, it's gonna be another red day after the week we've already had. But then, sure enough, right, we were hitting up against this 119.09, barely broke below it after kind of hitting it, and then we ran right up to our next point, which was great to see, honestly, not gonna lie. Push up, took a little breather, pushed up, got perfectly rejected by our 121.50 level, 121.48 by about 18 cents. But then it came right back down, and that's what I'm talking about, the roller coaster ride, right? Take a look at the first 30 minutes, and then the next, 45 minutes, and then we were kind of messing around VWAP, and I thought, we'd be kind of flat for the day, took a little breather, and then we pushed up into the close. Things that I like about today, above VWAP, we were pretty darn close to high of day. Things that I didn't like is that we weren't able to break through this 121.48 level. So now let's take a look at the daily chart, and we'll see what we see here. So not another, a great day for Apple, right? We went up for kind of 2-3 days there, higher highs, higher lows. Now we're making lower high, lower lows. So we're at mid 120s, or excuse me, 120.59, not mid 120s. That could be perceived as like 125 or so. So let's talk about future levels of support, future levels of resistance. So the first level of support we have is this 119.09. Saw a perfect bounce there today, even in the pre-market, right? We barely broke below it, and then right as the market opened, we pushed up, which is great. If we fall below that, you guys, we got run room down to the 116.20 point, where we were kind of back here when we saw that huge fall that one day, and we ended near the 116 level. Now, RSI is not looking too bad, right? We're slowly kind of chugging up, not making lower lows, which is great news for the stock as well. And then on the upside, let's talk about the levels that we have to break. So the first level would be this 121.48. Then we got the 123.69. Then we got the 126.65. So that's what we're looking at on the upside. Remember, we got rejected here. We've been rejected here earlier this week, and then take a look at this 126 level. We've only attempted it once, pretty much, since the beginning of March. We were above it one day, and then came right back down, and since then we haven't been able to close above it. So since 3-1, almost 3.5 weeks later, we've only gone to the 126 level once, got rejected. So not great news. This 126 level is going to be a little bit of a challenging test for us to overcome. But you know, that's what we're looking at in terms of price action. My goal for tomorrow, look, typically we see a Friday fade, but with the amount we've kind of seen pull back already, hoping for a little bit of a green day tomorrow. Hoping is the key word here. The market's not looking too great this week, but I'm hoping that we can, for once, end the week on a green note. So what I'm hoping for is we push above this 121.50 level if we see a green day and really make a push towards that 123s. And then next week kind of sets us up nicely. Want to quickly talk about the EMAs here, right? We're below the 89, got rejected by the 8 right there. You take a look at this bottom line right here, got rejected by it. The 89 EMA is 124.61. That was my goal for this week. Unless we have a $4 a day tomorrow, anything can happen, but you know, not very likely. Don't see that happening this week. So hopefully next week is kind of the week where we can really get above that 89 EMA. The reason I like this 89 EMA, take a look at this bottom line and take a look at, you know, over the course of the year, we've only really touched it a handful of times, right? Here we didn't touch it. Here we didn't touch it, kind of came down to it. Here we touched it. But pretty much going back to the pandemic starting, that's when we kind of were below it. And then mid 2019, we were below it, right? So that 89 EMA is kind of that last level of support. We've now been, you know, below it for about a month now, right? Closing only once or twice above it. So really hoping for that to come through. And then for the moving averages, right, we've got the 200-day moving average coming in at 116.77. So even if we drop below, hopefully we don't drop all the way to this 116.21 level, and we, you know, find support at the 116.77. So I think we're at a good place right now. Again, anything can happen, so don't go all in with calls. But I'm really liking the way that the market kind of reacted today with a little bit of a recovery, but there's still some uncertainties left for us to kind of wipe out. As you could see, you know, the 20 and the 50 kind of changed directions there, and the 20 started coming down. So maybe we see a little bit of a push up, and that comes up and we make a little bullish sign as we did back here with the crossing, and then eventually, you know, making higher highs. Look, if you have Apple stock or you got long-term options, you don't have to worry just yet, in my opinion. If we break the 200-day moving average, definitely signs to worry. But if you've got shorter, I mean, I would highly, you know, advise you guys currently to be careful on the margin you go on. Any quick fall can, you know, lead to a margin call. You have to sell your shares at a very, very big loss. Also would highly, you know, advise, look, if you know what you're doing and you're buying calls and puts, great. But if you're just buying calls a couple weeks out, you would need Apple to have a decent move. Look, back here a week ago, you could have made the same argument, and here we are today. So at that point, you're just losing time value. So if you're buying shorter term options, be careful, right? My option goes out to July. I'm still down about 35-40% on that. Holding on to that, and then I've got my Apple shares that I continue to hold, and I'm selling some covered calls against them. So my point being, if you are going to play options, I would be just a little bit careful until we get a clear indication, right? For me, that clear indication would be, hey, we get above the 89 EMA, 124s, establish that as a good level of support, and then we start to push up. But I mean, again, if you're comfortable, feel free to buy those. I'm here to warn you guys, and then we can do what we like. So this is the S&P 500, what I like looking at to see the overall market strength. Look at this trend down pretty much, right? If I were to draw, oh, I did hide all drawings. If I were to draw a line right there and draw a line down, clearly we are downtrending, not able to make higher highs, kind of like we were doing back there. So that's kind of the trend line that I'm looking for us to break. Remember yesterday we were right at this 34 EMA, and I wasn't convinced that that was the lowest we'd go. Sure enough, we went perfectly down to this 55 EMA. Look, if you don't like charting and you don't like analysis, the lowest today was 383.90. Take a look at the 55 EMA number there, 383.87, 3 cents off from where we bounced. Take a look at this bouncing here. Take a look at this bouncing on the 34 EMA. Take a look at all the times where we've gone perfect bounces off of the 55 or perfect bounces off of the 89 or an indication of where we could turn around, right? That's the reason I like looking at 8, 21, 34, 55, 89, those 5 EMAs, because historically it's been a good indicator of what could happen. So today what happened was we went down to the 55 EMA, we bounced, and we started to push up. Are we, you know, for sure done yet? I don't think so, because of this downtrend that I just highlighted. I think for us to really push up and make highs of 390 and 392 and 394, which are our next 3 levels of resistance, we also need to make a higher high and not kind of lower highs that we've been making all of this week and for a lot of last week too, actually. So that's what I'm looking at, you guys, hoping that S&P can, you know, sort of break out of this trend and start to really push back up. This is totally normal, right? We were at 398. I had talked about, you know, I think we could pull back before we hit the 400s. We could even go up and pull back again, since I think it is a pretty big deal for S&P to break 400s. It would not surprise me if it takes us a little bit to do so. Until then, I'm looking at these EMAs. So look, if we start going down tomorrow, looking at the 34 EMA at 387s. If we break 387s, my next kind of move is 383s. So that's what I'm looking at. You know, feel free to put this on your chart. If you like what I'm using here, I'm using Webull, link in the description below if you want to sign up. So hopefully we see a green end to the week tomorrow. We see Apple push up above the mid 121s. And, you know, hopefully next week is a green week. But, you know, I've kind of highlighted all these levels that I'm looking at. So watch out for that 8 EMA rejection. Other than that, you know, hope you guys had an all right week. I know mine's been a little bit red. But that's okay, we'll bounce back. So holding on strong and hoping for a reversal here in Apple soon. That's all I had for today. I hope you guys enjoyed. If you did, don't forget to drop a like, subscribe to my channel, comment down below what your thoughts on Apple are, and I'd love to chat with you guys down there. Let's remember to be a bit better every single day, and until next time.